expectations were very high going into this report. We saw Alphabet stock hit an all-time high ahead of its earnings, and now it's dropped about 7% extended hours. For reference, it's wiped about $80 billion off its market value just in that extended trading. But it is important to note that this revenue growth, even though it was a miss, still 17% growth. EPS also beat at $11.90. And traffic acquisition costs, which is another key metric to look at when we're looking at Alphabet, also was a beat. So the general numbers did come in line minus that revenues, and the revenues slowdown was particularly attributed to a slowdown in advertising revenues. If you look at the different segments where Google or Alphabet makes its money, it's mostly from ads, and that's from its key properties, including YouTube and search. That growth slowed to 15% year on year, and it had been growing at a rate of about 24%.
I was going to ask you about YouTube, because my daughters have worked out how to speak to my television now and ask it for all kinds of things. I don't know how to put the parental lock on, but anyway, I don't need to just yet, unless I put on the parental lock for horses or something. And the advertising revenues there at YouTube were stunning, weren't they? And this is an area where they don't have any worries.
This is an area that is the core of their business, but is slowing down a little bit.
So they went up 59%, didn't they, in the first 3 months of the year?
They still went up 59%.
That's stunning.
It's really strong growth. And when you look at these, there's a little bit of consternation among some of the people who cover Amazon, some of the who cover Alphabet, because they don't specifically break down all of the YouTube metrics.
Right.
So YouTube is also grouped with search, which is the core of where Google's advertising clicks come from. But generally, the YouTube growth was strong. It's also important to look at some of those other ventures for Alphabet.
So this is moonshots, yeah?
So those include the cloud.
They used to be called moonshots, didn't
Moonshots?
they?
Yeah, I think they might have been called moonshots.
I mean, correct me if I'm wrong, I'm going back a couple of years now, but wasn't the Boston Robotics part of that, and then they just sold that off again? They sold that again?
That is the other bets. So
Other
that's
bets,
Waymo.
okay.
I love the way Elizabeth is looking at you like you're talking a foreign language.
No, they called it moonshots.
Maybe nobody calls it moonshots anymore.
Oh, is that so? Is that old-fashioned?
It's now been called just other bets. They've tried to kind of make it a little more.
I mean, in the old days, we used to call it throwing spaghetti at a wall, didn't we? And you saw what stuck and you saw what fell off. Then we moved to moonshots.
Are you saying that we are
better.
two people divided not by the same language as they used to say it, but two people divided by the wrong generations? And we skipped about 3 generations between us.
Welcome to your middle years, sir. Welcome to
Sorry, Elizabeth, please talk about other bets.
That other bets category only brings in about $170 million in revenue, so that is not a moneymaker. But Google, on its earnings call, CFO Ruth Porat emphasizing how important that business is, and that's particularly Waymo, which is the self-driving car unit, and Verily, which is this health venture. And the idea is that Alphabet wants to get into these segments that it sees as sort of ripe for disruption in the digital space, and it sees that as autonomous vehicles and as healthcare.
So I've got an issue. So I was looking at some of the analysts' reports on this, and there was a lot of groaning about the fact that cloud isn't broken out as a separate story.
Yes.
And is this the way that we're going now? I mean, we obviously harumphed a lot when Apple told us that they were no longer going to be breaking out certain business segments. It's going to be harder for us to analyze technology companies because they're going to play the opacity game with certain business lines if they are worried that that might create a negative impression.
It's a trend that we are seeing among many of these big tech companies. For example, Facebook is now trying to focus on all of the users and all of its platforms versus the individual Facebook, Instagram, WhatsApp, for example. Apple, of course, with the iPhones. And there is a lot, grumbling is the right word, about Google when it comes to breaking down its different segments. And cloud is a huge area of growth for this company. But cloud is grouped with Google Play, which is its kind of apps platform, and then hardware, which is a totally different segment. That's smartphones and home devices. So it's very difficult to know where in that segment when growth in cloud is strong. It's a high margin business, but it's impossible to know exactly how strong it is. And it's frustrating, frankly, as a reporter looking at these numbers.
Well, isn't it?
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.